Hi, welcome to Curious Bricks. Last week we talked about Adobe. Today we're going to talk about one niche competitor to Adobe, DocuSign, ticker symbol DOCU, Q3 2021 earnings report. DocuSign went public in April 2018 and is currently a component company of Nasdaq 100 index. The company's earnings call was hosted on December 3rd, 2020. Since this is our first time covering DocuSign, we will start with a quick overview of what DocuSign does and how they make money. DocuSign is the leading software company in the e-signature market. The company has annual revenue of $1 billion in its fiscal year 2020, which leaped its second largest competitor, Adobe Sign, by several fold. Its flagship product, DocuSign e-signature, is widely adopted in several markets in the United States. As of January 2020, the company had more than 500,000 paying customers, but this figure has increased to more than 800,000 in its latest earnings report. DocuSign's existing business is divided into two segments: subscription business, which charges fees for the use of DocuSign's Agreement Cloud service. This segment represents 95% of total revenue. The other smaller segment charges fees when they help customers integrate to the platform or provide ad hoc services. These services are generally non-repeatable. When it comes to competitors, Adobe Sign is the biggest competitor to DocuSign's e-signature product. Since DocuSign is building its Agreement Cloud to incorporate a number of other services, I have also listed a couple of potential competing companies. Before we dive into the financial details, let's take a quick look at some key statistics. As of December 24, 2020, DocuSign's share price is $244.90, and its market cap stands at $45 billion. Neither the trading price-earning ratio nor the dividend yield is available, as the company still reports negative EPS and does not pay out any dividend. Now let's take a look at their latest quarterly financials. We will start with the income statement. In Q3 2021, DocuSign reported total revenue of $383 million, which is 53% higher than the same quarter last year. The revenue growth is driven by the strong growth from its core product, e-signature. In this quarter, we are seeing DocuSign increase spend on sales and marketing, R&D, and general administration to support the growth. As a result, the company reported an operating loss of $58 million, or a negative EPS of 31 cents. DocuSign also disclosed its revenue by markets. In this quarter, DocuSign not only had strong growth from the US market, it also delivered impressive growth of 77% from the international market. Now moving to the balance sheet, DocuSign maintained its cash on hand and short-term investments at around $600 million from the beginning of the year. Meanwhile, the company's long-term debt stays just shy of $500 million. Overall, the company's liquidity is sufficient for the next 12 months of operations. In this quarter, the management provided the following key highlights. First, the management reconfirmed that the trend of converting from paper to digital will continue and it will not reverse after the pandemic. The management also emphasized the traction they are gaining from ISV, SI, and reseller channels. Lastly, the company provided full-year guidance for the current fiscal year 2021. Revenue is projected to be close to $1.43 billion, total billing around $1.7 billion, and the gross margin to be in the range of 78 to 80%. During the Q&A session, several analysts inquired on the growth perspective post the pandemic. The management feels extremely optimistic with the growth on both the number of new customers as well as the number of envelopes sold to existing customers. They believe the $25 billion total addressable market is still the target they are going after to grow the business. Another area that caught a lot of analysts' attention is related to the growth prospect of the non-signature services DocuSign was aiming to expand within Agreement Cloud. At this moment, end customers are more interested in buying capacity on e-signature service than other product offerings. The timing is not ideal, but DocuSign's sales team continues to pitch the entire Agreement Cloud service. Analysts were also surprised to see the strong international growth. DocuSign expects the international business to continue with fast-paced growth. They plan to expand beyond the core 8 countries. Lastly, one analyst asked about the R&D priorities. The company provided 3 top priorities. First is the integration of AI capability to the overall product suite. Second is the launch of the notary service, which is expected to be $1 billion total addressable market. Third is to explore the macro opportunities in the agreement cloud business. Now let's take a look at DocuSign's stock performance before and after the earnings call. DocuSign's reported revenue of $382.9 million beat analysts' expectation of $361.2 million, and its adjusted EPS of 22 cents also beat the consensus of 13 cents. However, the market had quite a negative reaction after the earnings release. Lastly, here is the latest summary of analyst ratings of the company. In December, we do not have all the updated ratings from the analysts, but based on the ratings from November and December, we are seeing the ratings almost equally split between hold, buy, and strong buy. If you are interested in knowing more about this company, I recommend you conduct further analysis of the company's public filings. Thank you for watching this video. If you like this video, please subscribe to our channel.